What is going on YouTube? It's your boy Dollar Mike back at it again with another solid video, guys. Another banger. This one's gonna be a good video. It's gonna be a good video. If you couldn't tell by the title, today we're gonna be talking about some risky dividend stocks. Some dividend stocks that can make you a lot of money really fast. A lot of money really fast over time, and a lot of money really fast every single month in the form of passive income. But they're also pretty risky, hence the title. Either way, we're going to talk about 4 different dividend stocks in today's video. There are way more than that. We're only going to stick with 4 in this particular video. Let's not waste any more time. Let's jump right into the video. Let's go. Before we do what we gotta do today, I just want to say thank you so much for the continued support. I see people hopping in the Discord, doing their thing in the Discord, chatting it up. That's exactly what I like to see. It's exactly what I wanted from the Discord. 100%. Discord is free, so go check the Discord out if you haven't already. It's a 100% free community talking all about personal finance. We talk about stocks in there, credit cards, budgeting, all that kind of stuff. It's all talked about in the Discord. Make sure you hit that like button if you want to see more content like this, or you like these dividend videos. I really do enjoy making dividend videos. Hit that subscribe button to see that more content when I actually go and drop it. Check out those links down below, because those links down below will get you some free stocks, free cryptocurrency, and some free other stuff like money back and gas. And lastly, check out my Patreon if you want to further support the channel in any way possible. Thank you so much, guys. I really do appreciate it. We're going to get into this video. We're going to keep making more videos because I really do enjoy this. So let's not waste any more time. Let's talk about the first dividend stock, the first risky dividend stock on the list, which is one that's actually in my portfolio right now. Cool. So I took a lot of notes on it. Cool. So I took a lot of notes on this video. So I'm gonna be back and forth talking to you guys and on my phone looking at my notes because I can't memorize everything, but I'm trying to do my best. Either way, the first stock on the list is ticker symbol QYLD. They have a dividend yield of 10.37%, and overall every single month they're paying out a dividend of roughly 19 cents per share. As of recording this video, QYLD is sitting at $22.49 a share right now. And if we scroll down a little bit, I have about 50 shares of QYLD, overall up about $2, but we're not here for the gains. We're here for the dividend on this particular stock. An investment of $1,000 in QYLD would earn you about $8.66 per month. And if you 10 times that, meaning if you put $10,000 in there, that'll earn you about $104 every single month in passive income. If you guys don't know what QYLD is, I talk about it often on the channel, but if you don't know, they basically do covered calls on the entire S&P 500. And if you don't know what that means, then essentially the top 500 companies that's traded in the US right now on the public stock market, the top 500 companies, they'll do covered call options on those particular stocks. And basically they're betting that the stock price of that particular stock that they're betting on won't hit a certain price. So let's use Microsoft stock as an example. Microsoft is currently sitting at $277.80 a share right now. Basically, QYLD can go in, put a covered call strategy on Microsoft, betting that the stock price of Microsoft doesn't hit $300 by the end of the month, let's say. If the stock price of Microsoft then doesn't hit $300 by the end of the month or whatever date they set, then they collect a premium, basically a profit on top of whatever option they had went and put in. So if it does, then they would obviously lose out, and they would lose those 100 shares because a covered call, you would need 100 shares. And if they don't lose out, then they would collect that premium and keep their 100 shares and do it again the next month and possibly make even more profit. Simple enough. I try to make it as simple as possible, but if you still have questions, let me know down in the comment section below. So for QYLD stock in particular, this works best in a bear market, because in a bear market, stock prices are going down, and they can continue to bet that it won't hit a certain threshold, then they'll collect premiums every single month or every single week, depending on however they have the premium actually set up. So you'll be good to go if it's a bear market. If it's a bull market, sure, they can still make money, they just would make less. And since these profits and premiums that they receive month to month can change, overall there's no consistent dividend going month to month for QYLD. But for me, since I've been invested in QYLD, it's been pretty consistent around the 9 to around 13% dividend yield range. So anywhere between 9% and 13%, that's what I've been getting paid consistently from QYLD every single month since they've been paying me a dividend. And I have no issue with that. If it changes in the future, if they just lose their game somehow, lose their magic, and it drops down to like 1-2% dividend yield every single month, then obviously that's not worth an investment for me personally. But right now, great investment, sitting at 10.37% dividend yield, and I'm gonna keep holding what I got, and I'll probably be buying more as well. The second risky dividend stock that was mentioned to me by multiple people multiple times was ticker symbol ORC, and that is actually sitting at a 15% dividend yield, and currently they're paying out a little bit over 6 cents per share every single month. Ticker symbol ORC stands for Orchid Island Capital, and they're sitting at $5.20 a share right now, $5.20. Probably one of the cheapest ones that you can go ahead and grab on this list today, and I honestly don't think it's that bad. I think it's a solid investment, but we'll get into that in a second. Either way, if you scroll down, you can see I don't have a position on them right now, but we might start something because the dividend yield is very nice at 15%. So with ORC, if you invest $1,000, that's going to give you about $12.50 per month in the form of passive income. And if you 10 times that, meaning you put $10,000 into ORC stock today, that's roughly $150 in passive income every single month. And guys, another thing to notice, you want to get passive income that way, that's fine. But if you also want the passive income to be reinvested back into the stock, you can do that as well, because if you have it reinvested back into the stock with the drip turned on, then automatically you're going to get paid even more every single month. You don't have to have the passive income come out, go to your bank account or whatever, or have the passive income come out and you put it towards another stock. That's personally up to you. I like to reinvest all my dividends, but personally it does not matter. That's personally up to you, like I mentioned before. Yeah, that's kind of it. Either way, ORC is a mortgage-backed REIT. They remind me a lot of ticker symbol PSEC or PSPEC or Prospect Capital. They remind me a lot of them in the same way because it's basically the same type of company. They do the same thing. PSEC does the same thing as ORC does. And PSEC I also picked up around $4 or $5 a share. And now PSEC is sitting at about $9 a share on top of that consistent dividend. So it's basically just the same type of stock to me. The growth is there, everything's there. I like what I see so far, and I might actually go and sell a little bit of PSEC and go and just buy this, or put the profits I received from PSEC and move it to this. All in all, if you don't know what a mortgage-backed REIT is, simply they originate or purchase the mortgage on a particular property based on a leverage basis, and whatever money they earn in interest, they pay you in profits in the form of a dividend, in this case, every single month. So basically, they go out, they find homes, they then get the mortgage on those properties, and then the person that's actually living in that home would obviously pay their mortgage, pay their interest on that mortgage. Part of that interest would come back to us, or most of it actually, in the form of a dividend every single month. On top of that, ORC has been paying that consistent monthly dividend since August of 2020. And guys, you got to remember, these are risky dividend stocks. This is not going to be something where you're going to find them paying a dividend for 10 years back, 5 years back, even 3 years back. They might not even pay that dividend. But overall, consistently right now, in the current moment of me recording this video and uploading it about 2 days later or tomorrow, everything's pretty consistent. So right now it's good. Risky, you guys know, that's what we're here for. Not investment advice, just saying. Before we jump into the third risky dividend stock on the list, I just want to mention to you guys, if you're not tracking your dividends, make sure you're tracking your dividends. Make sure you check out trackyourdividends.com. They don't pay me to say that. I just want to let you guys know that it's a solid dividend investment platform, so you should check them out if you want to actually go and track your dividends. And the dogs are barking. I know you guys can hear that. I'm sorry, but it is what it is. Either way, let's get into the third dividend or risky dividend stock. So the third stock on the list is ticker symbol ARR. They are sitting with a 10.51% dividend yield. That's about 10 cents per share per month. Another monthly dividend for you guys. Ticker symbol ARR stands for Armor Residential REIT, and they're sitting at $11.44 a share right now. I also don't have a position on them. If we scroll down, it's not there because like I said, don't have one right now. I'm not going to spend too much time on ARR because it's actually the exact same thing as ticker symbol ORC or ORC. Either way, ARR is another mortgage-backed REIT. They're actually based out of Maryland, and they have government-sponsored loans like Fannie Mae, Freddie Mac, Ginnie Mae, all covering throughout the entire United States. Overall, they've been paying that consistent dividend since July of 2020, so a little bit longer than ORC, but overall, I still like ORC because of the price of ORC is only $5 versus ARR sitting at $11. Either way, either one kind of works. If you invest $1,000 in ARR, that's about $8.75 a month. And you 10 times that, you put $10,000 in to ARR, that's about $105 in passive income every single month. Now, it's one more risky dividend stock that I want to mention on this list today, but it's not really a stock, and they don't really pay a dividend, but they do pay you, so I guess it's a dividend. Either way, that is ticker symbol SLVO. They're sitting at a 24.81 dividend yield, quote-unquote dividend yield, and currently that's roughly about 13 cents per share every single month, but it is extremely inconsistent. But I'm going to explain all that right here, right now for you. So ticker symbol SLVO stands for Credit Suisse X-Link Silver Shares Covered Call ETN, not ETF, ETN. ETN, Exchange Traded Note. An ETF is an exchange traded fund, and ETN is an exchange traded note. And they're also sitting at $6.13 per share right now, and I also don't have a position on this one as well. As far as SLVO goes, I wanted to make sure everything is clear. This is not an ETF, meaning there are no actual stocks or positions in this actual fund or note or whatever you want to call it. There's no position in there. They don't have any particular stocks in there. So when you go and buy this particular stock, there's nothing there. You're not buying anything. So when you go and invest in SLCO, you're not investing in anything. You're actually just giving them money to then go and invest. When you give them the money to go and invest on their own, if they come back with a profit, they'll pay you in the form of a monthly like dividend. Overall, if they don't receive a solid profit, then you'll probably get a low dividend, and they receive a crazy good profit, then you'll get a crazy high dividend. This dividend yield has actually been up to about 35% before. So imagine you putting $1,000 in and you're getting $350 back every single month in a consistent dividend. Honestly, most companies, or just about any company, can't really hold some type of dividend like that, and they can't either. It's no difference with them. This is 100% extremely inconsistent, but if you want to take the risk is here for you to take. Overall, like I mentioned before, this dividend will change month to month. It's extremely inconsistent. So as far as you trying to look for some type of consistency with this one, you're simply not getting it. It doesn't exist. But like I mentioned before, it's nearly a 25% dividend yield. It's nearly a 25% dividend yield right now. And if it is a 25% dividend yield and they continue to hold that at the current stock price, share price, all that kind of stuff, if they continue to hold that, if you invest $1,000 in it right now, that's roughly $20.60 per month. And if you 10x that and invest $10,000 in SLVO right this very moment and nothing changes, then that's about $206.75 in passive income every single month. And I'm so serious with this one. This one might seem great on paper and everything like that, but when you actually go and invest in something like this, you're taking an enormous risk. Like when you're putting your money, you're giving your money to somebody you really don't know, and you're expecting them to get solid returns, which they could do. They could get way better returns than you might ever will. But overall, you just don't know. So overall, you're giving your money to somebody else to invest. If they make money, you're going to get paid. If they don't make money, you'll still get paid probably a little bit, but you probably do better off just being more consistent with it. But if you're willing to take the risk, you got some extra cash, hey, do what you want to do. It's completely up to you. It's your money. But yeah, this is definitely the most risky one on the list. And that's really all I got to say about that. So there you guys go. Some more dividend stocks for you guys to go and take a look at. For all risky dividend stocks, I have one in particular, QYLD, which I really do like. And I'm thinking about picking that other one up, which was ORC. I think that's a solid replacement for PSEC, or overall the next PSEC. So I see no issue with either one of those. The other two, they're cool. But overall, right now, I love QYLD, and ORC is pretty solid. So I'm pretty big on it. We'll see what happens as far as that. But there were other dividend stocks I didn't even get to mention in this video. So if you guys want to see another risky dividend stocks video, that I can make another one. I didn't talk about ticker symbol NLY, NRZ, USOI, TWO, BP, and there's so many more that I didn't even get to mention. So yeah, the video would just simply be too long. You guys, you know, the time wise, you know, I really do appreciate you guys watching my videos, but I don't want to make the video talking about 20 different dividend stocks all day long. You know, we can separate it up a little bit. Either way, thank you guys for watching the video. Thank you guys for all the support. Like I said before, hit that like button if you want to see more content like this. Hit that subscribe button so you're locked in. You know exactly when I drop it. Check out the Discord link down below. The Discord link will cover you as far as everything personal finance. I think I'm gonna have some credit card videos coming up next, so stay tuned for that. If you're interested in that, let me know what credit cards you have, stuff like that. And that's pretty much it. Check out the Patreon link down below as well. Hit those stocks, get some free stocks in the stock market. M1 Finance, Robinhood, Webull, they all got free stocks. They're all offering programs right now to get yourself some free stocks with my links down below. Cryptocurrency is moving on its way back up. Overall this fall, I think it'll take off just a bit, or right at the end of the summer, I think it'll take off just a bit. We might get some solid profits from crypto coming around the end of the summer, and then the rest of those links down there basically just give you some other free stuff. So that's really all I got to say. Like I said, thank you guys for watching. I really do appreciate it. I'm out. Take care of yourselves. Stay safe. Dollar Mike. Happy 4th of July as well. Peace.